morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 674th YouTube video, baby. Yeah. They're going to just keep coming at you. Traders, this video is being filmed on Wednesday night for trading Thursday. That would be Jan 13th, 2011. But I'd like to discuss something with you. It is a two-part video. If you like what you see in this video when it's done, come on down to my site at www.livewithoscar.com. Jump into my free trading rooms and contact me. This video is a two-part video. It is long-term, where the market's been and where it's likely going. And then, of course, we'll do our usual short-term trading for trading on Thursday. So two parts should be interesting. Traders, let me just remind you, futures trading is risky and can cause substantial financial loss. So if you do not have risk capital and you don't understand this game, you really shouldn't be in it. For you traders that are in the game, that understand risk capital, I want to step this out for a few moments. For you fund managers out there, for you long-term traders out there, for the traders that do not jump in and jump out throughout the year, that have a position that needs to be put on, managed and held, and possibly averaged into as it grows higher. For you traders out there, the first part of this video tonight is for you. Traders, here we go. I have many video fans. You've been watching me since the latter month of 2006, December 13th, or the 15th, actually, of 2006, was my first YouTube video. From that point forward, I was extremely bullish the markets, and let me go through something with you. Using the OMNI and the OMNI Trading Academy's techniques, the OMNI has helped us identify one of the greatest things I've ever seen happen in my life. Traders, I've been doing this 29 years. I've never seen anything like this. Let me see if I can show you. Remember, long-term trading now, forget the ins and outs, forget the short-term stuff. We're not thinking about that. We're thinking about whether OMNI is a tool that can forecast the future for you in a long-term analysis. Here we go. Traders, in 2007, you can watch. I have dozens and dozens, probably 100-plus videos through 2007, where I was calling for a big bull market. The OMNI gives us a call in the beginning of 2007. The OMNI says, Oscar, put it on your board. Tell your fans we're going to trade 1577. That was in the beginning of 2007, major bull market. We rallied up and rallied up and rallied up and hit the high of 1576, $1 away from the OMNI call. At that point, the crash begins. As we start to break into 2008, going towards 2009, OMNI makes another call. OMNI says the low will come in at 688, then revises it to 668, while we were still around 10, maybe 900 in the S&P, between 10 and 900 on our way down from 15, maybe slightly higher. The event is, OMNI says we're going to go to 668. And I think, just like I thought when it made the call for 1577, no way could it be right. But it was right to the dollar on the high. The crash begins. In 2009, in March, do you know what we traded? We didn't trade 668 traders. We traded 666. The OMNI missed the low by $2. Was it a fluke when we called the high and the crash, the subsequent crash? Possibly. Was it a coincidence when we called the low? Hundreds of dollars in the S&P, and certainly, to the number where it would go. OMNI made that call, and I thought, is that a coincidence? I mean, look, I'm the author of these OMNIs, right? I make a call for 1577, but who would believe that, including a guy like me who's been around 28 years at that point in time? But I put it on my board. I absolutely believed in the analysis. I told everyone I could about it, and we hit that high. Then I told you about 668, and we put in a low of 666. Was that a fluke? How about this? Using our OMNI, we then started to identify for the year 2010 how high we would go. OMNI gave us a projection. I'm talking February of 2010. We seen a drop into the 900s after the OMNI made this projection. OMNI's projection for the year of 2010 is 1290. Remember where we were, 666 after OMNI made that call. For 2010, it makes a call for 1290. Do you know what happened, traders? 8 trading days into 2011, we traded 1284. We missed 1290 by 6 points, a total of 6 points and 8 trading days. Again, let's go over this. Long-term traders, what do you think would have happened with your fund, hedge fund managers? Would you still be in business, some of you that are out, if you knew 1576 was going to be the high? If you knew then the subsequent crash, the 668 was coming? With that information, would you still be standing? If you knew we were going to trade 1290 this year, what would your fund have done? Traders, these calls were made in videos and then backed up with video after video after video all throughout 07, all throughout 08, 08 and 09, making the calls, staying steadfast no matter how many people wrote nasty letters telling me I was crazy. Then we made the call for 1290. Look up here. This has been on my board. Look how old it looks. It's been on my board since we started that call. We got to 1284. There is no better pinpoint accuracy technical analysis tool or black box system I've ever seen in my life. Nothing in 29 years has ever come close to my Omni with long-term calls. Again, if you think this is a fluke, watch the videos. There's over 674. They will depict exactly what I'm teaching people all the way to the high, down to the low, and as I talk about the high, and I stayed steadfast. Now, where are we? Perfect call, 07. Beautiful call, 08, 09. Just about done on the money, 2010. Omni has a call to make for 2011. If you think that these were accurate, wait till you see what happens this year. I've done the homework. I'm ready to make the call. But here's the thing, traders. If you would like to hear the call for 2011, I will not. I refuse to do it on YouTube. I would like to do this on television, on a much larger media, because when I made my call for 1290 this year, the people who followed me and saw that this one was right, and the people who saw that that one was right, started claiming that 1290 call as their own, and some of these people are out there on TV land. I do not think the Omni deserves to be disrespected in that nature. I think the Omni absolutely deserves the credit that it is deserved of. Look at these calls. I've been in the business my whole life. I've never seen anything that accurate. If you would like for me to make these calls right on your show, I'm talking to Bloomberg, NBC, MSNBC, CNBC, ABC, CBS, Letterman, Oprah Winfrey. I don't care who wants me on. I will not release this call unless I get on television because, again, the Omni deserves credit, and I am not allowing somebody else to take years and years of our hard work and claim it their own on television, where that's where the Omni should make that call. So, if you are out there and you are listening, you get in touch with me at my site, and if you're serious, I will make the call on your show, and together we can make claim to that call. Okay, that's it. That's what I'm telling you. I am not releasing this call. I will save it for my family and for my children, for them to survive on, unless someone from TV land invites me to their show, and I promise you I will release the call right there. Okay, so that's my long-term portion of the video. Next, we are going to what's happening on Thursday. Traders, before we get to Thursday, I want to mention something to you. You know that the Omni Trading Academy is steadfast with its rules. One of its rules, and you've seen at least 50 out of my 674 other videos, where I came out and said, traders, the fundamentals always come out in the charts first. It doesn't matter what reports are due to be released. You have a trading plan, you stick to it. Usually those reports are just going to work right into your plan. Well, we traded wheat last night. We knew there was a report coming out. Fundamentals always come out in the charts first. So we took our trade. It got stopped out, and some of you people are crying about that, and you need to understand something. Listen, you cannot have a rule that you just turn around and break whenever you get a nervous feeling. How many times were we dead right when we say fundamentals come out in the charts first? So you never, ever see us shy away from our Omni recommendations when there's any reports coming out. I don't care, from unemployment to the biggest company in the stock market reporting earnings. Omni never, ever shies away. I don't know how many of you remember this, but the last wheat trade we were in, There was a report due to be released. The report came out. We made 15 points profit on that trade. Now, the situation comes up again on Wednesday, Tuesday night for trading Wednesday. We know there's a report coming out. We have a weak trade. It gets stopped out. That is one rare occasion where the fundamentals did not come out in the charts first. So if you start picking and choosing every time you're going to agree fundamentals come out in the charts first, but in this situation I don't agree, you will never ever have any steadfast rules to follow. Everything's always going to be a fly-by-night decision. So I am here to say, I know fundamentals come out in the charts first. It's not going to work every time. I'd make that same call again if we have another report and I have a great technical setup in front of it. I would do it again. Traders, with the exception of the Fed making a decision on rates, have you ever seen me in 4 years not put out a trade because a report was due to be released? What would have made last night's grain report any different? So I'm steadfast, stick to my rules. That's what happened to wheat traders. I sent you a flash to warn you that there's a report coming. If you want to place your orders, that's up to you. And I'm glad for the ones who did. I feel bad that you got stopped out, but I like the ones that stuck to their rules and their guns. Now, we got that out of the way. I hope that's an explanation for you traders. That is not an excuse. That is hardcore sticking to rules, sticking to a trading plan, and not listening to the people who cry when once in a while that rule doesn't work. All right, so now we're going to get into what's supposed to happen for Thursday. One of the things I want to mention before that, a little bit longer term, is this. Traders, if you've been following my YouTube videos for quite some time, you'd recognize this. I started yelling and screaming in front of this camera throughout 2007 and 2008 when the Fed and this country, the USA, recognized we were having a meltdown up here. When the meltdown started, the Fed recognized it and immediately lowered rates, feverishly, lowering rates, lowering rates, lowering rates, lowering rates, trying to push the dollar down. At the same time, you should recall me yelling into the video screen going, I can't believe you people in Europe, you're raising rates right now. You think this game of knocking our dollar down and your euro going up is going to help you? Here's what's going to happen. You spent 6 months raising rates while the U.S. knocked its rates down when the derivatives cracked and the real estate cracked and the U.S. saw a problem. While we knocked our rates down, Europe raised their rates, and I was in the camera saying, Europe, you are so wrong for doing this because here's your fate. When the United States finally turns and starts to move higher, you guys got almost a year of turmoil before you follow us. 6 months to a year. Remember that for raising your rates in the time where you should have been lowering to accommodate the problem. Now, that was coming out of me in a lot of videos. Here we are now, 2 years later. The crisis is abating. We are starting to move higher, and there's a lot of chatter out there. Well, but what about Europe? What about Europe? Traders, we knew Europe would take time to come behind us. This we saw when the game began. They gave themselves a 6-month to 1 year jail sentence by raising rates when they shouldn't have for that time. Then they got smart and started lowering them, but they were already too late. They will be 6 months to a year behind us in their recovery. So do not look at Europe and think the stock market in the U.S. can't go up because of what's happening in Europe. Remember the videos. Remember, I'm a 29-year seasoned veteran analyst. And for those who do not know it, I am a well-accomplished fundamentalist. I kid you not. I just do not mix the two when I give opinions. Fundamental in me makes me realize exactly what's going on here, the fundamentalist in me. And what I told you, what happened 2 years ago, is simply happening now. Don't let Europe scare you. They will make their turn just as we have. Okay? Now, get that out of your mind. Worry about the U.S. markets. What's going to happen for Thursday? We got a green Omni on the board, baby. Clap for that one, Mikey. Loud, loud, loud. Green Omni on the board. We love what these markets have been doing. We love what the way the ES looks, the way the NASDAQ looks, the way the Russell looks. I love the transportation average view. The weeklies, the dailies, they look fantastic, traders. I'd like to show you some charts on that. Again, I'd like to teach you how to do this analysis for yourself. So after seeing the charts, make sure you come on down to my site. Again, it's www.livewithoscar.com and come to my free trading room so I can show you this analysis. All right. Once again, I see there's a sign up there, so I have to give this reminder. Traders, Omni Camp is being held in February. It is the last weekend in February. It's February 25th, 6th, 7th, and 8th. And if you'd like to come to OMNI Camp, where you will be trained by me personally, locked in a room for 4 days with me and 4 other guys until we have this right, you come on down to my site, notify me, or fill out an OMNI Camp application right below this video. Now, tomorrow, hire unequivocally. Do not fall in love with any downside dips. You got to like the upside. And now I have some pretty charts to show you why you should be very in tune with buying dips and expecting much higher in this market. With no further ado, let's go look at some charts. Okay, traders, the excitement. Look at it. Check this chart out, the NASDAQ weekly bar chart. This was the highs before the crash in 2007. This was the highs for NASDAQ on a weekly bar. Crash all the way down to 2009. Subsequent rally. This red line represents getting above where the crash started. NASDAQ has recovered 100% plus the entire drop from the 2007-8-9 crash. We are now above it on a weekly. Very strong looking indicators. Very strong looking market. You gotta love what you see on that NASDAQ. And traders, next couple of charts should paint the picture for you. Let's look at another. Okay, OMNIacs, I'm sure some of you students at the OMNI Trading Academy, the guys who hang out with me during the week in my trading room, I'm sure you recognize what's before your eyes here. This is the S&P E-mini weekly bar chart. And you've heard me profess from the 666 low that this first run we had was phase 1. Many of you heard me talk about phase 1. Then we had our little sideways flat, and I've been telling you all about phase 2 for weeks and weeks and weeks on end. This is phase 2, traders. It should last almost as long as phase 1. This is a weekly bar in the E-mini S&P. Phase 1, as you can see, we called it. It happened. We had the flat. Phase 2, we've been calling for phase 2 for many, many weeks. OMNIacs, you know what I'm talking about if you've been to my site. Phase 2 should last all the way into here, traders. This market is strong. This is a 200-bar weekly average. Look at how when we broke below, major break, tested it, major break into a flat, finally got above it, tested it, and away we go. Very, very bullish looking at the weeklies. Now let's tone it down a little bit. Taking us down to the dailies, we are now looking at our leader for trading tomorrow. That would be January 13th, 2011. Traders, look at this lovely parallel channel on the daily bar. When it gets down to it, you need to buy those dips. That's the whole premise of do not fall in love with the downside. When you get to the bottom of this, you go long. When you get to the top of it, you get out. When you come to the bottom, you go long. That's the way it should work. What a beautiful trend. We just started testing the bottom, held it, and are now rallying away. We belong all the way up there, traders. The leader, Dow Jones Transportation Average Daily Bar, looking fantastic. Let's go look at another chart. Okay, traders, the follower, ESH11, the E-mini Daily Bar chart. Look at the wonderful parallel channel that has been in. And now we're in a secondary channel, and it's just bouncing off that secondary channel, so you should easily at least get up here, if not to the red line. Really, really strong looking on the daily bars in all of the indice markets that we have checked this evening. Let me show you what goes along with this chart. That's very interesting. Traders, staying with the E-mini S&P daily, look at the open interest just plodding along to the upside. Slow, steady increases all the way through since December began, straight into January. Look at these steady increases. The volume's increasing. The market is increasing. If you have increasing open interest, increasing volume, and increasing price, that internally is a very bullish scenario. S&P, very bullish looking here. Now that you've seen the open interest and the high volume that's started to accumulate, let's go look at a couple of its indicators. Traders, one of my favorite indicators is the MACD because it is a very slow lagging indicator. And when it gives you a signal, it is generally a signal for a trend to continue. If you'll note, simply, if you use this just to draw simple trend lines, look at how well it's maintaining its trend. And now I have this area blown up because there's a little hook that looks like this right now, and that hook usually points towards more upside. Then you look down here at your RSI pointing clearly straight up. Traders, every single technical indicator that I use at the Omni Trading Academy is bullish for this evening's analysis, which affects trading on Thursday, January 13th. So traders, that's what the E-mini S&P and the NASDAQ and the Dow Jones Transportation averages look like. They are quite bullish weeklies and dailies. And now if you believe, of course, that the bottom is in, and of course we called it way long ago and it's been in, if you believe the bottom is in stocks, then you also believe in our call in the bonds that the top is in. And that call we made, a long time ago, when the bonds were getting down through the 130 area, we made the call for the top at 129, and we've dropped down since then. Let me show you that chart. Traders, if you believe that the bottom is definitely in the stocks, then you believe the top is in bonds. This is a weekly bond chart. As you recall, we professed that this head and shoulders would give us a head test. If the head test failed, we can call the top once the turn comes. The head test failed, we called the top right in this area. And since then, it has broken down severely. Our first target is much, much lower. And our secondary target is so low, the price is not even on this chart. And a hint for you, the lowest price I see here is 109. And our second target is below that. We are looking for bonds to go much lower. And, of course, if that's the case, you know the S&P will be on the opposite side of that. If you believe in this scenario, you better believe in the long side of the S&P. So, traders, you've seen the charts. There's my technical argument for what's going to happen on trading for Thursday. And again, no joking out there for these major calls. Even somebody like Kramer, if you're out there and you want me on your show as a technical analyst to give the 2011 call, I will do it. If I do not get a call from someone in TV land, I will not let this call out. I will just keep it for me. Traders, let's hope I get that call. I'd love to publish where we think we're going. I'm not telling you if it's up or down, but I can tell you the homework is done. I will do it on your television show. Give me a call. If not, me and the kids are going to have a good year anyway with this call.
What's the number?
What's the number? Yeah. It's not a chance. I am not giving it out unless you put me on television, baby. Give me a telephone call, 702-629-4755. Let me know if you'd like to sit with me and do an interview. All right, traders, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stop soaring. Emotions are out.
Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.